Hi there, welcome to kneppyinvests. Let's have a look at some interesting announcements during the week that was. Now, to be honest with you, it's quite a boring time of year. In fact, the last part of 2023 or the last part of the year tends to be quite quiet as many companies, it seems like, go on a month-long vacation, really from middle of December through to about the middle of January. We don't see many interesting announcements released from companies. However, we do see a trickle, and I'll show you a few interesting announcements that have been released in the first week of December. First, we're going to talk about the XJO. Another good week for the XJO, up about, I believe, about 1.65%. A few good days in there, particularly, if I remember correctly, on the Wednesday, up 1.65%. Also on the Monday, up 0.73%. Other bad day on the Tuesday, but the last 2 days of the trading week, Thursday and Friday, were quite muted, fairly flat. Although I just noticed the XJO is up 0.24% when it was down at the start of trading. More than likely in the first few hours it was down. Let's have a look at the 5-minute chart for the XJO. Yeah, it was down initially, but then we did see the market recover during the day. So the market is looking, won't say absolutely bullish right now, but it is looking much better than it did a few months ago. So that low we did see was on, we've got to decrease the size of my head there, was on the 30th of October, and we saw the XJO get down to 7,660. So up about 500 points, nearly 10% since then. And my portfolios are looking fairly healthy because of this nice little bounce. Now, the story last week was, particularly towards the end of last week, was gold. Gold looked like it could have been breaking out. In fact, the title of one of my videos was Gold Breaking Out, ... maybe question mark. Just because it does look like possibly something is breaking out, we need confirmation. And not thankfully, but we did not get that confirmation from gold during the week. In fact, what we saw on Monday was a really interesting day. That was on Monday, wasn't it? I believe that was on Monday. Yeah, Monday. Probably one of the most interesting trading of a commodity you'll ever see. The volatility on that day was extreme, and you can see that volatility. In fact, I'll go to the 1-hour chart for gold. You can see that volatility on the Monday when gold went on an absolute tear, and this would have been in the first hour. So trading finished in this on 7 a.m. local time on the 2nd of December, and gold was at about 2,070. And then in the first hour of trading on Monday, gold rallied all the way up to 2,000. What was the high that day? 2,120.9. So it did look like gold was breaking out, and this could have been the confirmation. Unfortunately, we then saw a lot of selling coming in, and then during the rest of the day into Tuesday, gold fell from 2,120, whatever it was, all the way down to 2020, actually 2019.93. And that was at 1 a.m. on Tuesday. So within 24 hours, gold fell, went from gold breaking out, possibly breaking out, to this being a false breakout. And since that false breakout was sort of confirmed, gold has been going sideways. So this was a false breakout. Gold has not broken out, and gold remains above the fairly significant resistance area. So unfortunately, gold has not broken out. Unlike Bitcoin. Well, actually, Bitcoin didn't break out. It just keeps on going up. So unlike gold, where we did see a lot of selling coming in on the Monday, which forced gold down, Bitcoin just kept on going higher. In fact, this went up about 5% on the Monday and a further 5% on the Tuesday, and has been going sideways since, which is a good sign. After you see a nice little run up like we're seeing Bitcoin, you want to see the price of the commodity, the Bitcoin or the cryptocurrency, or the share price just go sideways to breathe. And that is what Bitcoin's doing right now. So much more bullish on a Bitcoin have no idea about the other cryptocurrencies. I really follow Bitcoin because my only investment in, now you might laugh at the word investment when it talks about cryptocurrency, but my only money in cryptocurrency is in Bitcoin, up to 43,484 as I speak. Now, that's all I'm going to talk about when it comes to the markets, commodities, and Bitcoin. Now, let's have a look at some interesting announcements released by companies. First, I'll do a sort of a review on a company that I've already done a standalone video during the week, and that was Atlas Pearls. So this company released the auction results, and have a look at that video on Atlas Pearls. For right now, the pearl market is going absolutely bananas, and Atlas Pearls is taking advantage of that. Share price for this company went up and rallied almost 50% on Tuesday, the 5th of December. And share price hasn't done much since then. But that's, again, just like gold or Bitcoin. This is actually a good thing. We haven't seen much selling coming in. And Atlas Pearls right now is at 12.5 cents. Just have to confirm that. I am recording this video at 3:21 or 4:21 p.m. Australian daylight saving time. So I'm in Brisbane, so Australian daylight Eastern time. Is that right? Yeah. And yeah, Atlas Pearls, and because I'm recording it at 3:22 local time, it means the market is closed, but TradingView has not updated. It's 20-minute delay. I'm not paying extra to get up-to-minute updates. I don't need up-to-minute updates when it comes to charts and that sort of thing. But anyway, so Atlas Pearls remaining strong at 12.5 cents. And probably my big question, maybe I should talk about this more when I do my trading portfolio, my trading and portfolio update, is whether or not I should take profits in this company. Now, to companies that released, other companies that released interesting announcements during the week. Most of these companies, in fact, all these companies I don't own, but they released sort of interesting announcements, or maybe not so interesting announcements. And the first company we're going to look at is Compumedics. Compumedics. This is a healthcare medical, or maybe I shouldn't say healthcare medical. I don't really have to say healthcare, just a medical device company. And they did release an announcement that will always get me interested in doing further research on the company. And this company released an FDA approval announcement for whatever it is, SomFit, FDA cleared for USA market. Now, I'm just going to open up this announcement because you do get a little bit of information about this company in the announcement. So SomFit, I'm pretty sure this has something to do with sleeping. Whether it has to do with sleep apnea, I'm not sure. They should mention it further down here. SomFit technology comprises of a number of market-specific and disorder-specific diagnostic products which offer several advantages to organizations operating in the sleep diagnostic space. So it sounds like this is not for individuals, it's for organizations who are helping people who have sleeping disorders. Interesting thing about this announcement is they do talk about the addressable market, which in the USA is between, for this particular device, is between 110 and $100 million. And they're aiming to have 10 to 30% of that market. So on the low end, they're hoping between, 33 million, and at the high end, 99 million. That doesn't sound right. 10% of 110 is 22. 30% of 180 is 36, 54 million. So between 33 and, still doesn't sound right. 10% of 110 million is 11 million. 30% of 180 is 54. So they're aiming between 11 and 54 million, which is a big difference. So there's a big range of possible money within the next 24 months. Now, this company already has profits. In fact, when you look at their history, actually, I do have it up here, Compumedics. When you look at the revenue history, it's just gone nowhere over the past 15 years. So back in 2008, it was 38.6 million. Now it's 42.4 million. And it's been going up and down since then. If you look at the markup cap of this company, in fact, we can do that using interactive chart. And instead of price, we'll look at markup. In fact, we can put revenue on this too. We'll just look at the last 15 years. So revenue just goes sideways. I've been at times where revenue has gone up a little bit, but has been a little bit of interest in this company back between 2016 and 20 when the market cap of this company got as high as 160 million. Now the market cap of this company is 40 odd million. A little bit of excitement in this company when they did release this announcement. Share price rallied about 56%. At one point on the day, share price reached a high of 34 cents, but closed at 25 cents. So if you do take a look at the 1 hour chart, more than likely that high was in the first hour. Yep, the first hour, retail investors getting a little bit too excited. You see this all the time when a company releases a really good announcement. Retail investors get a little bit excited, and then the share price falls during the rest of the day. It doesn't always happen. Sometimes the low of the day is in that first hour, but normally, I'd say maybe 60 to 70% of the time, the high is in that first hour. In fact, if we look at the 5-minute chart, more than likely it's in the first 5 minutes. Not quite. In fact, for Compumedics, it was in the first 20 minutes. Now, one of the reasons why there might have been selling coming in during the day is just look with the chart. The share price of this company has been in downtrend for a long time, going all the way back to 2020. In fact, the COVID-19 financial panic, share price of this company moved in downtrend, and it has been out of since. And the reason why we did see a little bit of selling on the back of this announcement is a lot of shareholders in this company are underwater right now. Share price significantly down from when they bought in, and they're finding the opportunity to sell out. A potential breakout, if we don't see the share price go much lower than 24 cents, because last time share price is or was at this level was actually back in October last year. So share price of this company is at a 1-year high, but still a lot of shareholders bought at high prices, and they're seeing the opportunity to sell out. Very big volume coming on the day. So a lot of those shareholders, those stale shareholders, did sell out when it comes to this company. And then how do we know how this company is going to perform with this FDA approval? So on the low end, $11 million in 2 years. So that should put a little bit of bump into the current revenue. But if they really do succeed and get 30% of the addressable market, this company will more than double their revenue. So possibly, if you have faith in the management and the company, this could be a good time to think about buying Compumedics. Mesoblast. Yeah, let's have a look at Mesoblast. So this company did a capital raising during the week. And I always like to look at a capital raising, what the share price does a few days after. I'm pretty sure the capital raising was at 30 cents. Current share price of Mesoblast is 28.5 cents. And actually down 3 cents today, down 9.5% today. So the reason I like to look at and compare the current share price to the capital raising price is that could lead to whether the capital raising is successful, not talking about institutionals, but for retail shareholders. If this is a retail shareholder capital raising, so let's have a look. It does look like it is. It says entitlement offer and placement. So usually entitlement offer is for the retail shareholders, and the placement is institutional. So institutional placement, 120 million shares at 30 cents to raise $36 million. And a 1-for-4 pro rata accelerated don't ask me what all that means. I'm not the biggest expert on all the jargon when it comes to capital raising. Entitlement offer to raise $61 million. So it looks like the majority of money is coming through the entitlement offer or the retail capital raising. And now the share price is below 30 cents. So any shareholder who was thinking about taking part in this capital raising can now buy shares at a price lower than 30 cents. So possibly it won't be absolutely successful capital raising, but there is a chance that there is a word for it where for that amount of the retail entitlement offer that is not taken up, an institution will come in and buy those shares or buy that part of the capital raising. I forget what it's called. Maybe it says it here. I can't see it. That's just because I can't see it. Doesn't mean it won't happen. Oh, here it is. Retail entitlement offer shortfall shares not taken up by eligible retail shareholders may be allocated to existing institutional shareholders and to other institutional and sophisticated investors. So that's right, shortfall. So at this point in time, I am not paying much attention to Mesoblast. They have to prove to me that they are a legitimate business, and that means they need to become profitable, generating cash flow. They've been promising a lot over the past 10 years. And when I say 10 years, I mean 10 years, maybe even longer than that. And you'll be able to see when we look at the weekly chart here. So the share price right now at 28.5 cents. The last time the share price for Mesoblast was 28.5 cents. You have to go all the way back to never. This is the lowest the share price has ever been for this company, because back in back in 2005, the share price of this company did get as low as 32 cents. So we're all-time low for this company. A lot of hype in this company back in 2010 and 11. Share price went to a high of $9.50. So again, too much hype in this company. That hype was unjustified because the company has just done nothing at this point in time. They have a little bit of revenue, and that revenue was $3.2 million in the last year, but loss-making or significant loss-making over the past, 15 years or so. In fact, back in 2000, well, that's quarterly. Let's have a look at the annually. So back in 2023, they lost 121 million. Before that, 125 million, 132 million, 116 million, and revenue of $11 million in the last year. So they're well off becoming a profitable company, and this is why the company keeps doing capital raisings. In fact, let's have a look. One thing I like to do here is I'll add Mesoblast. We'll just see how much shares on issue have increased for this company. Get rid of you. Get rid of revenue. So the market cap of Mesoblast at one point in time was as high as $3 billion back in 2020, as high as $2.25 billion back in 2011. And the main reason why the market cap was much higher in 2020 than 2020, even though share price was significantly lower, was because of shares on issue. So let's have a look at the shares on issue. We'll get rid of the markup, and you'll be able to see the shares on issue just keep on going up because this company keeps having to do capital raisings because they are not producing any cash flow or positive cash flow in their operations. In fact, back in 2010, shares on issue were about 150 million, maybe even less than that. Can we see how much they were? 132 million. Now they're up to 779 million, and it does look like shares on issue will increase even further from here. So to get that much money, $100 million, was it? So you just think $100 million, share price 30 cents, so 300 million shares, probably even more than that. They might even say how many shares will increase. Do they mention how many shares will be issued? 323 million shares. Oh, yeah, 323 million. So the shares on issue for this company will exceed 1 billion once this capital raising has come to a completion, which means if the share price doesn't change from 28.5 cents, the market cap of this company will still be $285 million, which is still a lot. I need to see some sort of approval from the FDA. Another company called Atturra. This company did a takeover of Cirrus Networks. That's it. A company I was actually really low margin Cirrus Networks, but I think Atturra did see some value in that company, and that takeover bid has gone through. The company also released a company update on the 6th of December. And things are moving in the right direction, or based off their expectations. So they expect revenue of $235 million this year and greater than $280 million in financial year 25. They expect EBITDA to be between 25 and 27.5 million in financial year 24. Now, based off financial year 23, interest, taxation, depreciation, and amortization was about $10-11 million last year. So just say it's about $12 to $14 million. So possibly the company will have about $12 million, $13 million in a profit. Current market cap of the company is about $200 million. Now let's have a look at the chart, the daily chart for this company. Nothing much going on. Share price really going sideways at this point in time. Now, I think if the company can maintain a nice increase in revenue and profit, so $10 million profit last year, $7.2 million previous year. But because it's $10 million profit right now, PE ratio about 20. So I wouldn't say it's overly expensive. According to Ticker or TradingView, the price earnings ratio 18.76. So if I do see the share price of this company fall significantly, say to 60 cents, maybe even to 50 cents, if that's possible, then I might see some really good value in this company. And that's when I would become interested in taking a position in Atturra. At this point in time, not yet, just because the chart is not looking that healthy. In fact, the share price down 8%. In fact, there's no trading today. And it was down 8% on 11 shares traded. So you might have You might have a problem with liquidity of this company. I don't have a problem with that. But you can just see what happens when there is a lack of liquidity. Share price can drop 8% on lever shares, and no one wants to sell today. So we have a couple of buyers at 83 cents. So when that two buy bids are hit, the share price of this company will increase by about 5%. And you can see the first sell is at 92 cents. So again, a big gap between the first buyer and the first seller. So that could be one problem you might have with Atturra. So you'd have to be patient if you do want a position or take a position in this company. But things are moving in the right direction for Atturra. Evolution Mining did a capital raising and acquisition. And the share price right now for Evolution Mining is $3.60. If you have a look at the chart, you can see the share price taking off as gold was trying to break or attempted to break out. Share price of Evolution Mining got to $4.20 on Monday, and it's fallen back to $3.60. I'm pretty sure the capital raising for this particular acquisition was at $3.80. I could be mistaken. Here it is. It's a $525 million institutional placement. So this is not for retail investors, it looks like. Oh no, there is non-unwritten share purchase plan. So the main thing I want to open is to know what the capital raising price is. I'm pretty sure it's $3.80. Yeah, $3.80. So the share price right now for Evolution Mining is a fair bit below $3.80 at $3.60. So just like that other company, Mesoblast, you can buy shares in Evolution Mining now at a much lower price than the capital raising price. I have not had a look at this acquisition. It could be a good acquisition, could be a bad acquisition. I just don't know. But again, Evolution Mining share price will be a slave. Maybe that's not the right word. It will be related. It will be influenced by gold prices. So if gold prices plunge, Evolution Mining share price will plunge. If gold prices rally, Evolution Mining gold price or share price will rally. Chart sort of looks okay, and just like gold chart looks okay, would be better if the gold prices did break out. Polynovo. Okay, company did release sort of a trading update on the 6th. So first $8 million sales month and $9 million of revenue in a month. So things are moving in the right direction for this company, but I don't really care about growth in revenue, monthly revenue, that sort of thing. I want to know when the company is going to be consistently profitable, that sort of thing. So let's have a look at the last financial report the company did release. Not a trading update. It looks like it was the August financial reports. We'll just open up, see if this company was profitable. And I'm pretty sure the share price did. No, the share price high was at the start of the year, not in August. So let's have a look at, have a look at the, you have to go all the way down. Looks like it might be here. Here we are. So revenue, 65 million. So really nice increase in revenue from 41 million to 66 million. That's what I want to see. But the next thing I want to see is a company becoming profitable in operating cash flow and free cash flow positive. They were not quite profitable, loss making by 5.6 million. And one of the reasons why the loss from last year, this year actually increased was because of employer-related expenses up 18 million, corporate administration expenses up $7 million. So combined, that's 25 million, which means, and there must be other reasons here. So their spending increased at a greater rate than the revenue. So the company was actually more loss-making this year than last year. Let's have a look at the cash flow. Yeah, still burning through a lot of cash at this point in time. So not as interested in this company. Did a massive capital raising, looks like $51 million capital raising. So even though the company is moving in the right direction in terms of revenue, I want to see some signs of profitability coming in, some signs of scale, that sort of thing. And I haven't really shown that at this point in time. However, the market did like this particular announcement of the first $8 million sales and $9 million of revenue in a month. Share price rallied about 13% on the back of that. And the share price has remained at these levels since then, which is a good sign. But you can just see the chart, share price has been a downtrend after reaching a recent high of $2.70 back in February of this year. And more than likely, the share price decreased a fair bit, 12% on the 8th of February Probably because of a financial report. Let's have a look. Not quite. They released their financial numbers on the 23rd. Not sure why. There was a massive decrease in share price on the 8th. They released nothing on the 8th at all. Anyway, that's Polynovo. Okay, let's have a look at Magellan. Magellan share price financial group has been on a bit of a tear lately. Company released their funds under management at 10:30 a.m. on the 6th. Now, if you look at this, if you just look at the table, you would say their funds under management actually increased from 34.3 billion to 35.2 billion. But if you look at the commentary in November, Magellan experienced net outflows of $1 billion, which included net retail outflows. So still outflows there, but the funds under management might have increased because of stock market gains, that sort of thing. I'm not sure exactly why, but it doesn't really matter because the market liked it. Nice little rally in the share price of Magellan, particularly after they released this announcement. Share price has rallied 4%, 4%, and 3% in consecutive days. And from the low of $6, share price has risen not quite 50%, we'll say about 35 to 40%. So nice little bounce in Magellan Financial Group's share price. I would not say the low is in at this point in time. I would not say the share price of this company or this fund manager is now in an uptrend. This could be just a bounce. Not huge volume coming in. Nothing like we saw back on the 6th of October. And that would have been the last time they released funds under management. That was really negative, down 18.5%. Anyway, next company is PeopleIN. I might do a standalone video on this company. Now, PeopleIN didn't release any announcements, but the government is doing an industrial reform bill or something like that. And a part of that bill did go through the Senate or whatever, and so has been approved. So they didn't release any announcement in regards to this. If you do look at the PeopleIN AGM address, they're actually positive about the industrial reform. Let's open that up. So I actually did have a look at this. And the reason I might do a standalone video is just because there could be value in this company. I think it was in this. Okay, as most of you will be aware, the federal government has proposed industrial relations reform bill going through a Senate inquiry report back in February 2024. Now, there was part of that bill was successful, something, I forget exactly what. This is a complex bill, blah, blah, blah. If passed, we believe this will create an opportunity for PeopleIN. So they are actually positive about this industrial relations reform bill. Now, they also experienced some weakness in the company, in that sector, which is one of the reasons why, if you look at the share price of this company, it is horrible. This is the worst looking chart you might be able to see on the ASX right now. Share price down to $1. Not only that, the last 2 days, massive volume coming in. So one of the reasons why I think I'm doing it, might do a standalone video on PeopleIN, is could there be some value in this company right now? Market cap is about 110, 120 million. They do have a little bit of debt, but also the volume coming in, maybe this is capitulation. I'm a little bit concerned about this industrial bills reform, but that's why I might do a video in terms of whether there is value in PeopleIN right now. If you look at the weekly chart and go back to the COVID-19 financial panic, what was a really good support level for PeopleIN during that period? Just gonna, for some reason, just lost volume there. I never want to lose volume. Must have clicked on something. And of course, it takes me to Polynovo. So let's go all the way back to COVID-19. So share price of PeopleIN reached a low of about 93 cents in one day, but that was a nice little bounce. So if we just put a line, a nice little support line here at around $1, it's a round number. And if we just go weekly, $1 is an interesting level for this company. So will $1 hold for PeopleIN? There might be some value, really big volume coming in the past week. Highest volume, weekly volume we have seen for 3 years. So wait out for that standalone video. More than likely, we'll do it on PeopleIN. I'm not the biggest fan of the company itself. Really low margins. And when I say low margins, this company had $1 billion of revenue in the past year, $1.2 billion of revenue, but only $18.94 million of profit. But the market cap of this company could be such that even if profits or margins go down a little bit and profits go down a little bit, there could be still some value in this company. Wait to be seen. Boss Energy. What did this company do? I forget. It was a capital raising, but no, was it a capital raising? Yeah, placement. So if I see placement, that means it was just to institutional investors. So was there any? Oh, there is a share purchase plan. So they're raising $205 million. So I don't absolutely like this. $205 million in the placement and $10 million via share purchase plan. Why not reverse that? Give shareholders more chance to buy more shares. So shares issued at $3.95. Now, are there reasons why they're doing the capital raising? Boss Energy to require 30% of Encore high-grade Ultimates in situ recovery project for $60 million cash. Let's have a look. I'm going to have another look at what they're going to use the funds for. There should be some announcement here, what they're going to use the funds for. So maybe it's in the presentation. So it's a lot of money. Probably go straight past it. Transaction. I saw transaction funding. Here we go. No. So shares on issue will only increase by about 50 million. That's okay. They're not telling me, I might have missed it, what they're going to use the funds for. And I really want to know what they're going to use the funds for. So I'm just going to say if maybe I missed it in this announcement. Here we go, use of funds. I knew somewhere there was going to be a use of funds. Okay. So Alta Mesa, cash consideration of 30%, 96 million, and then a little bit of money here and there for everything else. So the majority of funds are going to be used for that acquisition, looks like. So what was the share price? Was it $3.80? I've already forgotten. $3.95, and the share price of the company is at $3.95. Look, it works sometimes. Sometimes right bang on $3.95. And the share price of Boss Energy, this is the weekly chart, however, the weekly chart looks nice. And the share price moved into a nice little support zone, this green area with this blue line through it, which is the longer term moving average. Sometimes I use that as a support zone, and a nice little bounce off that support zone for Boss Energy. One of the more favored, I suppose, uranium companies on the ASX. I do think uranium prices will have to get above $100 a pound to justify some of the specific company valuations right now. So I do think there is a possibility that the market is a little bit ahead of itself when it comes to uranium companies. Now to a few companies I know nothing about. The first one, I know its ticker code is IVZ, Invictus Energy. So this was interesting trading. Makuyu, probably pronouncing that absolutely wrong, gas discovery. Now, to be honest with you, I have not had a look at this announcement. But the reason I don't need to have a look at this announcement and know that the market likes it, of course, is just by looking at what happened to the chart. So on this particular day, share price of Invictus Energy increased 28.1% on 83.9 million shares traded, which is significantly higher than the previous few weeks. But if you have a look at the chart for Invictus, you can see share price is all over the place. So this is the daily chart, all over the place over the past few years. So sometimes there's a lot of excitement in this company, and that excitement wanes away fairly quickly. Now, if you're really keen on this company And if you're patient, possibly you could just wait to when the share price gets to 10 cents. It's done it 3 times in the past few years, and that's the time to think about buying this company, possibly. But anyway, as we look at the trading, when the company did release this specific announcement, a lot of volume. So the best volume day since November 2022 for the last year. But we did see a bit of selling coming in. And the main reason we saw selling coming in, because the share price rallied really hard a few weeks ago, the 26th of October, or 25th of October, no, 26th. Share price rallied up 16%. And so a lot of shareholders bought in between about 20 cents and 26 cents. Fair few shareholders would have bought in that level or in that range. And the share price of Invictus got into that range on Thursday. So share price was actually trading between 20 cents and 25.5 cents. So that's why the share price, or there was a little bit of pressure on the share price during that day, because all these shareholders who bought at higher prices saw their opportunity to break neutral when it comes to Invictus Energy. And you can sort of see that when you look at the 5-minute chart. A lot of selling, a lot of buying coming in the first few, I say 10 minutes or so, and then the selling came in and the share price drifted lower all the rest during the rest of Thursday into Friday. So that's Invictus. The next company on the list is EXR, Elixir Energy, another energy company. Share price of this company rallies 7.8%. Gas flow from permeable zone provides unexpected upside. I actually do like the title of that announcement, and particularly last 2 words, unexpected upside. So just by those 2 words, this is a positive announcement. Now, in saying that, I went through the announcement and went, okay, we'll say it's positive. And here is the chart. So, share price of this company has been rallying over the past few months. Since September, share price has increased from around about 5.5 cents up to 10 cents. In fact, share price has more than doubled, and a lot of volume coming in as well since that time. That's actually a good sign. When you see volume really increasing or ramping up, that's a good sign the market is taking notice of a company. However, in saying all that, if you just look at this chart, share price of Elixir has been a downtrend since the start of 2021, when the share price reached a high of about 50 cents. So share price has fallen 75% in the last 2.5 years, almost 3 years. Is this the end of the downtrend? Well, if you go back to November of last, you can see this little rapid increase in share price, and that brief enthusiasm in this company faded away fairly quickly, and the share price kept on falling. Will we see that exact same thing this time around? I think not as likely, because the volume has really increased, and we've seen this really good volume day after day. A little bit of volatility the last few weeks, but that's okay because the share price is rallying. But because a lot of shareholders have bought at high prices in the past, again, we need to see all those shareholders leave the share registry, sort of like a turnover, and we need new shareholders on the registry, particularly shareholders who bought at a lower share price, say back in October and November. I'm not sure we will see that just yet, but the volume suggests there has been a significant turnover in the registry of shareholders in this company over the past few weeks. So possibly promising for Elixir Energy, particularly when it comes to their unexpected upside. I just like the wording there, unexpected upside. Gold Hydrogen, I sort of mentioned this company recently in a video. Now, you'd think this company is about hydrogen, or maybe gold, or maybe both. Maybe they're trying to combine gold and hydrogen to form a unique substance, which, who knows, expensive hydrogen. I don't know. Anyway, they released an announcement on the 6th. Very high helium concentrations found at Ramsey 2. They also detected hydrogen at Ramsey 2. So detected hydrogen and helium. They also did capital raising, $14.8 million institutional placement. Was this also an entitlement? Could retail investors partake in this? Doesn't look like. I don't like that. I like when a company does a capital raising, I want every shareholder to be able to take part in it. Anyway, gold hydrogen, though, when you look at this chart, a lot of excitement in this company since the end of October. Share price has increased from 24 cents to 93 cents. Big volume as well. So this is what you want to see. So the breakout of this company was on the 1st of November. Massive volume coming through, and the share price rallied 51.7%, and the share price kept going up. And if you look at the few, about the next 1, 2, 3, 4, 8 trading days after that day, share price went sideways. A little bit of volatility in there, but that's a good sign that all those shareholders who bought at high prices back here in January 2023 more than likely have already sold out. So again, a turnover in the share registry, and more than likely most of the shareholders at this point in time holding shares in this company bought at lower prices, and then the share price took off again. So nice looking chart for gold hydrogen, market cap 110 million. And that's what I'm going to do in regards to gold hydrogen. I don't know if this company will be successful. Who knows? I have no idea. Skycity only down 3.5% when they released a trading guidance update, and it was not positive. This was a profit downgrade. Well, when I say profit downgrade, not true profit, EBITDA. For some reason, companies like releasing EBITDA updates. I prefer profits and cash flow over EBITDA. EBITDA, in my opinion, is lazy and sometimes does not tell you all the picture. Anyway, and they use normalized EBITDA. So this is an EBITDA downgrade, a slight downgrade. So originally it was, and so last year EBITDA was 310 million, and they forecast a modest year-to-year increase on EBITDA or in EBITDA. So they expected EBITDA to be more than 310 million. Now they expect EBITDA to be lower than last year. So you'd think there would be a fair bit of selling coming in. Share price only down 3.5%, which means the market is already pricing in a lot of bad news for this company. And at this point in time, there's no reason to buy this company. This is a classic downtrend. It's been a downtrend since the middle of 2021. So talking about over 2 years, share price has decreased from about $3.30 down to $166.5. So share price has halved in that time. And there's no end in sight to the downtrend. Not a lot of volume coming in today. So again, I think the market expected this sort of thing from Skycity. Now on to Sigma. Okay. So you might look at this announcement list and go, what's happened here? Why am I talking about Sigma? They went into training halt on the 6th and now a voluntary suspension, which I actually have not had a look at. The reason I'm excited about this announcement is why they've gone into a training halt. Okay. So trading halt is requested pending an announcement relating to a potential material transaction and is required to ensure Sigma shares are not trading on a misinformed basis. So I saw that potential material transaction. Are they making an acquisition? No. In fact, Chemist Warehouse, based off information I have heard, and I wonder if the voluntary suspension is saying anything. No, they're still talking about a material transaction. So possibly they're making an acquisition, but no, it looks like Chemist Warehouse is going to buy out Sigma Healthcare. It's sort of like a reverse takeover. I would be really interested in becoming a Chemist Warehouse shareholder. This is the company to own in this space, in my opinion. I just wish I bought some shares in Sigma Healthcare before they went into trading up. Share price was rallying. So I think there could have been a little bit of rumors, loose lips before this particular trading halt because the share price was in a rally. So interesting times for Sigma Healthcare. And if Chemist Warehouse does become or lists on the ASX through Sigma Healthcare, I could become interested in taking a position in that company. Now, Santos. So we're talking about acquisitions, reverse takeovers. I've also heard rumors that Santos and Woodside might merge. This is why share price of Santos is up 6.2% today, while Woodside not really doing anything. Did they release any announcements today? Let's have a look if Santos or Woodside released any announcements today. Okay, response to media speculation. So it's maybe not rumors. Okay, Woodside and Santos confirms it is in discussions regarding a potential merger with Santos. So based off the share price reaction and the market reaction, this merger will be more beneficial for Santos, up 6.2%, while Woodside's down at 0.5%. In fact, when you look at Woodside Energy, share price has broken through support level. In fact, let's have a look at Karoon. I haven't looked at Karoon all week. So oil prices must be dropping like a rock, which would be good for the oil pumps or the petrol pumps. So Santos, Karoon down to 195. Santos looked pretty bad until this nice little rally as well. Would I be interested in a Santos-Woodside merger? No, absolutely no. It's just a bigger company. That's it. I'd probably be more interested in Karoon still. And the last company I want to talk about in today's video is a company with the ticker code IXC, Invex Therapuetics. You might notice if you do look at this share price down 70%. So what sort of negative announcement did this company release today? Oh, it's down, share price down 70%. Oh, the shareholders must be in a panic. Not quite. So I actually did have a look at this because I saw the share price down 70%. I went, oh, what bad announcement did this company release? No, capital return. So the, what's it called? The ex-div date was today, which means if you're holding shares just today and not previous to today, you can't get this capital return. So they probably would have mentioned here, effective date for the capital return, 6th of December. Last day for trading of shares entitled to participate in the capital return, 7th of December. Trading in shares on an ex-return of capital and ex-dividend basis, 8th of December, which is today when I'm recording this video, which means if the share price dropped 17.5 cents, more than likely the capital return would be, I'd say, between about 15 and 17.5 cents. I'm going to see what it is. Possibly we can get it just in dividend section of ComSec. Nope. Okay. Let's have a look at last 3 months. Proposed capital return to shareholders, $14 million on the 1st of November. 19 cents per share. So share price only dropped 17.5 cents. So it probably would have been beneficial for you to keep on holding shares because share price did not drop 19 cents. Only 17.5 cents. I'm a little bit surprised by that. Although at one point, yeah, on open, the share price did open at 6 cents, which was 19 cents. So the share price, yeah, I'm not sure why there's a rise in the share price today. I'm not sure why this company is doing a capital return, $14 million. That could be very beneficial for the company moving forward. So there must be reasons behind it. I don't know. I don't follow this company at all. If you do know why, and I'm not going to open up the chart, or not the chart, the announcement again. Is this company producing any cash? No. No. Company's burning through cash. Again, why are they doing a capital return? Do they really need it? Don't they need the money unless they're winding down the company? So let's have a look. I'm still a little bit intrigued right now why they're doing a capital return when they might need the money. The return of $14 million has considered the discharge of remaining forecast costs relating to the closure of the IIH Evolve Phase 3 clinical trial while balancing the medium-term funding requirements of Invex existing programs in traumatic brain injury. I still don't know why they're giving the cash back because they've only got net cash of approximately $5 million. And if they burn through that cash fairly quickly, then unless they're just going to wind up the business, I have no idea. Interesting announcement from Invex Therapuetics. That's all I got today's video, week that was. If you have any questions about any companies I've mentioned, XGO, Gold, Bitcoin, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.